a lady minister for the first time.
بالنسبة لأحاديث مجلس الإدارة.
According to Saudi's Samba Financial Group, the Saudi economy is set to contract by 1.8% in 2009. Real estate firms are said to be the first to benefit from Dubai's recent $20 billion bond program. According to retail consultancy Retail International, there is still room for more malls in the Gulf region. Plus, we speak to Osman Sultan, the CEO of the UAE's second telco operator, Du, about their recent earnings and the overall state of the telecom sector in the UAE. Those stories and more coming up in this program. Welcome to Business Arabia. I'm Nadine Hawa. According to the Samba Financial Group, the Saudi economy is set to contract by 1.8% in 2009 due to oil output cuts and weak non-oil growth. Samba is the latest bank to forecast an economic slowdown for the world's top oil exporter. Real GDP growth in the largest Arab economy would, however, resume at 4.2% in 2010, Samba said in a recent research note. The slowdown in 2009 would be mainly spurred by a 14% reduction in Saudi oil output this year as the OPEC member attempts to support global prices, which have dropped more than $100 a barrel since peaking last July. Although the bank expects the non-oil sector to expand by around 2%, they say the growth will be offset by the contraction in oil output. Moving now to the UAE, where, according to the Director General of Dubai's Department of Finance, Dubai's real estate companies will be the first to get support from the Emirates' $10 billion bond sale. Details of how the first tranche of a $20 billion sovereign bond package by the Dubai government will be used were given by Nasser al-Sheikh at a conference in Dubai. Al-Sheikh confirmed the bond scheme was not backed by assets but secured by the Emirates government. He also added that it should be enough even in the worst-case scenario. The money would be used to help companies refinance their debt, with property-related firms likely to be the first in line for support. A fund to support small businesses is also being considered, Al-Sheikh said. According to Retail International, a retail consultancy, there is still room for more malls to be built in the Gulf region. According to the consultancy, there is still a market for new malls in the Gulf, with only Dubai consumers having access to the same amount of shopping that the average American does. Barring Dubai, organized retail space in the region's major cities is still well below the average U.S. density of around 1.9 square meters gross leasable area, or GLA, per person. Only Dubai is at parity with the U.S., with other cities in the Gulf notching up only half of what the typical American shopper has access to. All that glitters is still gold. For Dubai, 2008 saw an increase of 53% over 2007 in terms of the total amount of gold traded via the Emirate, despite challenging economic conditions. And according to experts, 2009 will see that growth continue. More in the following report.
Dubai, the city of gold, witnessed significant growth in 2008 despite economic challenges. The total amount of gold traded via Dubai came to $29 billion in 2008, an increase of 53% in comparison with $19 billion in 2007. Total imports of gold to Dubai reached 674 tons during the 12 months leading to December 31st, representing a growth rate of 21% against 16% growth in 2007. On the other hand, exports during the same period amounted to 371 tons, showing growth of 29% compared with 287 tons in 2007. The list of gold suppliers to Dubai in 2008 included more than 100 countries, at the head of which were the UK and India. Meantime, Dubai exported gold to 64 nations, mainly to India and Switzerland. Officials at the Dubai Multi-Commodities Center, DMCC, indicated that gold prices went up to unprecedented record levels in the first quarter of 2008, causing the flow of large quantities of small pieces of gold into the city to be reprocessed and liquidated. Later, however, during the fourth quarter of the year, prices plunged, leading to a rise in the size of imports of gold biscuits. This clearly reflects the fact that Dubai represents a market which is capable of adapting to changing circumstances and unsettled economic conditions. Furthermore, the total volume of gold traded through Dubai during the second half of 2008 came to $16 billion, representing an increase of 57% in comparison with $10 billion during the same period the previous year. Officials of Dubai's Multi-Commodity Center find that individuals, governments, and investment funds have been showing great interest in gold as a safe investment during the current economic climate. Therefore, it is expected that Dubai's imports of gold, dedicated mainly to purification and re-exportation, will keep their strong performance throughout 2009. Exports are also expected to remain positive due to the growing demand on investment in major consumer markets, such as that of India.
According to Standard Chartered, business sentiment in the UAE is on the rise, heightening the importance of the government addressing the liquidity crunch. Markets have reacted positively to the news that Dubai will be able to meet its financial obligations this year, with the Dubai financial market posting its biggest daily increase on the day of the announcement, with the market closing up by almost 8%. In a note to investors, Standard Chartered economists wrote that sentiment is improving, and with momentum now turning positive, there's an opportunity for policymakers to step up their efforts to improve liquidity in the UAE economy. Dubai's government last week said that the $10 billion in bond proceeds from the UAE Central Bank will be sufficient to cover the Emirates' debt refinancing needs this year. Moving now to market news. According to Shuaa Capital, the Saudi stock market will stage a sharp recovery in the second half of the year. Mahdi Mattar, Shuaa's head of research and chief economist, said they expected the recovery in the Saudi equity market not to be gradual but sharp. They also forecast a 30% upside in the Tadawul All-Share Index benchmark in 2009. Mattar added that while it can be difficult to predict the timing of these forecasts, they expect the recovery to take place during the second half of the year and to be in the form of a rally after a period of range-bound volatile trading. Signs of global economic relief leading to increased oil demand was likely to be the main driver behind a boost at the Saudi market this year, Shuaa Capital said. Well, joining us to discuss the Saudi market and other regional markets is Haitham Arabi, CEO and fund manager at Gulf MENA Alternative Investments. Hi, Haitham. Nice to have you on the show. Well, I was just talking about the Saudi market. Shuaa Capital expecting a sharp recovery in the second half of the year and a 30% upside for 2009. What are your thoughts on that?
I think there's a lot of reports that are coming out today. Some are a little bit more bearish, talking about the contraction in the economy, with oil prices continuing to go down, so that's going to have its impact. And you have very ambitious reports that are coming out. Shuaa is one of those reports. I think it's very difficult for any analyst today to predict. There are too many variables and very much dependent on oil prices and the time when oil prices are going to recover, trickle down effect, the actual government spending, at any point during the year whether it's going to be halted or not. So in general, I would say, it's very difficult, and I think maybe 30% is a little bit too aggressive of a target. However, I am very hopeful that the Saudi Arabia is probably one of the first markets within the GC to at least start instead of recovery, but at least normalization, where prices or at least equity valuation is going to reflect the real growth or expectation of growth. And I think this should be happening. As a matter of fact, we've already talked about it before, where we should expect this to happen sometime in the second quarter. So I don't think we're going to wait even till the second half of the year before that starts happening. But again, this is all very much dependent on where oil prices are and how sentiment is going to be. But one thing that is very clear is Saudi Arabia was one of the first who immediately stepped in. King Abdullah came out to say that nothing in terms of government spending will stop. As a matter of fact, the budget was a record spending budget for the year. Indications that they will fund that through a deficit and through issuing treasury bills in the event that this is going to be necessary if oil prices and revenues continue to go down. Today, total debt to GDP in Saudi Arabia does not exceed 12%, so it's among the lowest in the GCC. They have plenty of room to really tap into liquidity, continue their expansionary fiscal policy. We've seen also a very good testimony recently with the cabinet or government reshuffle, which even included a lady minister for the first time. And this is a solid statement, indication of kickstarting reform at a fast pace.
Let's look at some of their stocks there. One stock, for example, doing very well is SEC, Saudi Electricity Company. Although other stocks or other companies rather have sound fundamentals, but we're not seeing them being traded based on that. How do you explain it?
Correct. Well, there's still a lot of uncertainty. Of course, the banking sector, one of the hardest hit sectors. There's still a cloud around what to expect in terms of forward earnings and forward multiples, and so you're going to see a lot of sideways trading, some pressure that's really lingering over these stocks and some of the other blue chips, including chemicals, petrochemicals, and so forth. However, if we are to take a look at strategy-wise, our investment strategy, and we had probably mentioned it maybe at previous times, where at some point, and I was expecting more towards the second quarter, we will start seeing decoupling within sectors from one another. And that is because some investment or strategies are going to be more of a defensive play. They're going to go for high yield stocks. You're going to look at stocks that are either utility based. Telecom sector was our favorite pick in the past. And I think we're starting to see that actually materialize. And if we go even look at other places like in Abu Dhabi recently, we see that Etisalat was up more than 15-20% over just the last 10 days. So that's also another indication that we're starting to see now the decoupling trend within sectors, a lot more focus on defensive, cash cows, high-yielding stocks, and we're going to be in really an earnings season in terms of dividend yields. So that's probably partly explain why we're seeing that particular utility stock on the upside.
Okay, moving to the UAE, Dubai, as you know, recently announced the issuance of a $20 billion bond issued by the government of Dubai. Sorry.
Correct.
How important was that move? Of course, we saw the DFM, the Dubai financial market, jump up about 8% on that news.
Correct.
How important was that move?
I think that was great news. It is very much of a landmark move that we're seeing this year. It's certainly very positive. And there are three elements, at least, that we can say, why is this very important? First of all, which is very simple, Dubai does have a higher leverage, as everybody is aware of. And today, in order to meet its liquidity requirements for 2009, this $10 billion bond, which was subscribed, or the first tranche, which was subscribed entirely by the UAE Central Bank, first of all, allows them to meet all their debt obligations and debt servicing for 2009. Probably leave him some also to re-inject in some of the vital projects that were put on hold because of a short liquidity
the
squeeze.
real estate.
So I think this is very good news and potentially could help start to speed up the economic cycle, recovery within the economic cycle. On the other hand, this also was done, and it's very interesting to take a look at the bond itself. This is an unsecured bond that was very much subscribed to in full by the UAE Central Bank, and without any conditions whatsoever, and at 4%. So it's almost very lenient pricing, when everybody knows today banks are scrambling, extracting deposits by charging 6 and 7 and 8% term deposits. So that clearly tells you there's a bit of a contango going on, which very much is a strong message by the UAE Central Bank about the sovereign credit worthiness of Dubai and how strong it is. It is an unconditional debt obligation that they're subscribing to at very low rates, which is good for their debt servicing as a burden on the budget. And again, these are going to send very strong messages, especially lately. We've seen the CDSs and government bonds, sovereign as well as corporate or quasi-government entities bonds were ridiculously low and with enjoying very high yields, and I think that's going to strengthen that, and probably when things get better, it's going to allow Dubai to tap into cheaper sources of debt. Finally, which is I think is most important thing, is this is the UAE Central Bank, which is a pillar of the UAE and of the federal government. And that's a very strong message that's being sent out there. We've seen a lot of talk recently, especially coming out from some of the bigger names globally in terms of newspapers that came out and said very much that there is a fear that this time the federal government is not going to do anything. I think that was unfounded. It was very sensational, media driven, but in reality the testimony is very much there. Dubai is very much part of the UAE federal government, and the federal government was very serious when it meant it will step in to help at no cost any of the Emirates in the event that there is a need for any liquidity, and they sure have stepped in. I think that sends a very strong message, and a message that the UAE federal government is very serious about stepping in to help any of the Emirates in the event that they needed any help.
As I mentioned earlier in my previous question, we saw the Dubai Financial Market Index rise by almost 8% on news of the issuance of the sovereign bond. But after that, what we saw was the index slowly and steadily lose pace on a downtrend. So does that mean that these catalysts are just having a very limited effect? Are markets still run by sentiment?
I think clearly investors today are still very short-sighted. So whenever they see a bit of profit that's being made, soon enough, they're going to lock in that profit. There is still uncertainty, most of which is really coming out from global factors, expectation of more bad news or economic numbers that are coming out of the U.S. This might impact oil prices. So in general, there's still a lot of uncertainty overshadowing, I think, global markets in general, not just the GC markets. And as a result, and this is probably the good sign, is what we've started seeing in Dubai, even prior to the announcement of the $10 billion bond that was fully subscribed, we started seeing some momentum building up. And this is a good positive indication that even speculators are starting to step back into the market. People are interested. However, they are short-sighted. They're a little bit jittery because they're still relative uncertainty globally. So whenever they see a spike of 10, 20%, especially that now some sectors and particular stocks are doing 30 and 40%. I think Arab Tech was a very good example. It jumped from 70 fils to close to 2 dirhams in a matter of 2 weeks. And I think that was a substantial a spike that naturally you're going to see some profit taking. So what happened following the bond, and I think still the good news is not really totally priced in, is that it kind of triggered a wave of profit taking because it added another 8% to an already a 20-30% market performance in the 2 weeks that came before. That is one. Two, we're also seeing a series of bad news still coming in. There's a new wave of sell-off in global markets. We've seen it also pull back in oil prices yet again. So that may have also helped speed up that profit taking that we've seen.
Haitham Arabi, CEO and Fund Manager at Gulf MENA Alternative Investment, thank you very much.
Thank you.
Coming up after a short break, we speak to Osman Sultan, the CEO of the UAE's second telco operator, Du. He tells us about the telco sector's challenges during these difficult times and talks to us about their latest earnings. That's coming up right after this short break. Don't go anywhere.
يعني وبالنسبه للتاثير الواضح يعني التاثيرات خلينا اشوف بالنسبه لقطاع التامين يعني ذكرت انه نبيل
Welcome back. Etisalat was the sole telco provider in the UAE until 2 years ago when Du started its operations, breaking Etisalat's monopoly. A few years after coming to life, Du has finally posted their first profitable full-year results for the year 2008. Joining me to discuss these earnings and to talk to us about his views on the overall state of the region's telco sector is the CEO of Du, Mr. Osman Sultan. Thank you, Mr. Osman, for coming on Business Arabia. You just announced, as I said, your first profitable full-year results for 2008. What was behind those earnings?
Thank you for hosting me. Well, I think that the key word is growth. What was behind these earnings, and one might say maybe unexpected earnings so early, is growth. It's not a secret that this growth has been fueled by the extraordinary momentum of growth that was, prevailing in the entire UAE.
Yes, over the past couple of years.
Over the past couple of years, over the past 5 years, 6 years, decade. I mean, it's clear that the story of the UAE has been exceptional, and this reflected as well in our ability to attract, because it's always more difficult to just, gain within existing subscriber base of your competitor. But I think we had very good results in capturing the lion's share of what we call newcomers in this market, and that fueled our growth. Now, growth in subscribers. The good news as well is growth in revenues, which means that these were really subscribers that were using and actively using our services. And when you have a healthy top line with proper operational efficiency management and with the proper investments in the right places to ensure that you are sustaining your growth, you reach profit. And this is what happened. And this is a very good news for us. This is a very good news for us for two reasons. One, because it's very good in the current situation to reach this phase and move to the next phase. Mm-hmm. The second one is because we were growing faster than expected and we invested faster than anticipated. Actually, we had to go to the market to seek for financing earlier than anticipated. This was in the plan. This was meant to happen in 2009. Actually, we secured our financing facility in the first half of 2008, which puts us in much better position as far as cash is concerned today.
We just mentioned how throughout the current economic climate, you've still managed to post such earnings. Now, does that mean you have not been affected at all by the economic downturn? And how do you evaluate the performance of the telco sector in general throughout this crisis that we're going through?
Well, with your permission, I'll make a difference between telco sectors in general and maybe the specific story of Du. Du is a growth story. So clearly we are continuing to grow in 2009. Now, whether, and I'm giving these numbers as, whether instead of growing at 50%, we'll grow at 30%, 25%. I mean, this is where you have to look at the situation right now. There is definitely a prevailing situation. I mean, you just have to wake up in the morning, read the newspapers, open any TV channel, mm-hmm. You see that. I would say that telecommunication is more and more becoming a commodity. That is one. Is that to say that they are completely shielded? No, of course not. That is putting a series of constraints on telco operations. You have to be more efficient. You have to have a more efficient operation. Being a company that was recently created, we could focus on this. And I would say that I feel quite confident that we can, go through this phase and even anticipate for the coming development, because I think we should make no mistake, there will be development, there will be growth, there will be a momentum after everyone will adjust to this prevailing situation, be it individuals, households, communities, businesses, nations will adjust to a new, new equation, a new reality. Mm-hmm. But once this is done, there will be growth. There will be, people will have continued to move, people will have to trade, people will have to do business. And this part of the world, the UAE is set up to really continue to play a leading role in this growth in this region. So I'm very optimistic. We have to really focus on ensuring that we invest our money in a very accurate way in order to really ensure that we can just generate the profit, generate the return to our shareholders, and continue to really make what is necessary to service the market, because we are still really in a growth. Our mandate was to introduce and to really dynamically create competition in the UAE market. I think the first 2 years of operation are an evidence that we did succeeded in doing this, but this is just the beginning of a much bigger story.
Well, you just mentioned how business has to continue. You just signed a deal with Vodafone. Tell us about that.
You know, I like to make the metaphor with, a newborn. The company 2 years ago was newborn, and I was saying this to our people, our employees, I was saying this to the market, and very often we were asked to run before even we could walk. That's the paradox, but that was an exciting challenge. So everybody is looking for scale. Other operators, the name of the game is, going in geographic expansion. Mm-hmm. It's not on our agenda today. Nevertheless, I think by doing the right partnership with operators that has scale, you can ensure that you provide the benefits of what scale would bring through solid partnership. We believe that this could be our partnership with Vodafone. First of all, it's an open partnership. It's really in a spirit of partnership. We will constantly look of what can be of benefit to our customers, what can benefit to Vodafone as well to their customers when coming to the UAE, etc. So the main, I would say, chapters that will articulate this agreement are first, international roaming for our customers and Vodafone customers. And second, it's servicing better multinational accounts, the ones that have as well direct contacts and business with Vodafone across the place, the vast footprint of Vodafone.
I want to ask you about the recent report by Oliver Wyman, which said that telco companies in developed countries have been a lot more affected by the current economic downturn than companies in this part of the world and in emerging markets in particular. What are your thoughts on that?
I think that this is what I was referring to, because these telco companies were operating with very pressured margins because sometime of irrational competition that was happening. And, that's the result of